Well, Becky, it's like a boat. When everybody is on one side, boat often tips over. And that's where technology stocks were going into September, and the boat tipped over. So fundamentals have not drastically changed from September to now. It's just all market positioning and sentiment.
So what does that mean once we've seen the boat tip over and stocks come down this sharply? Is that a time that you think it would be okay to get back in, or do you think we are at a more normalized level of what you can expect long term in terms of ownership?
Well, we're not at a normalized level. We are still overpositioned in technology. And the biggest risk is that investors suffer from recency bias. In this case, the recency bias is overweight technology. Technology stocks always go to the moon, and all dips are buying opportunities. I do not see any evidence that investors have moved away from that recency bias. So as a result, in the short term, the market is very oversold, and we can have a very sharp rally. But over the medium term, there's a very high risk in technology stocks. Ultimately, a day will come when investors' conviction that technology stocks go to the moon, all dips are buying opportunities, that conviction will be shattered someday. And when that conviction gets shattered, there will be an undershoot. And that will be an excellent opportunity to back up the truck and load up on technology stocks.
We've seen a lot of pain already inflicted, a lot of these stocks down 30% or more, but you're saying that this is still not the time, that people should stay to the sidelines for now?
Well, I do not say they get out of the market. I think they should hold good technology positions, but they should be underweight in technology. We were underweight in technology coming into October, and that's where we are now. We'll take on some short-term trading positions on the long side in technology stocks. In October, we took some short positions in technology stocks. But for our long-term positions, we will stay underweight in technology until there's more pain.
Okay, but just to put a fine point on it, you think that there's going to be a little bit of a run on this, and then it's going to drop back down. My question is, if it drops back down, how low are we dropping, and what's the signal to buy?
Well, it depends. So if you are looking at, so technology stocks, are all over the place. There are a lot of very expensive, very high P multiple stocks in technology. And I wouldn't be surprised that ultimately in 2019, some of them lose 50% of their value.
50%?
Sure, wouldn't be surprised. Now, Google will not lose, or Alphabet will not lose 50% of its value. But some of the other high flyers could lose 50% of their value. I wouldn't be surprised. Now, when would we buy it? Well, we want to see pain when people are no longer convinced that technology stocks are the place to be. And then there's undershoot after that because people are slow to react. People are slow to take those losses. And that undershoot will be the time to buy. And we see those undershoots periodically in the markets.
Nigam, thank you very much for your time. We really appreciate it.
Thank you.